So I've recently just passed my 3 Topstep 50k combines. I've been trying to pass a funded challenge for about 11 months now. Tried lots of strategies, support and resistance, trend lines, break and retest, ICT 2022 model, but nothing's ever quite clicked with me. The only thing that sort of come close was the ICT 2022 model, but I just wanted to do a quick video, especially to those who have tried ICT before, but it's just missing that extra piece. Because that's how it was for me. I really liked the ICT stuff, I just couldn't trade it very well. Let's get straight into it anyway. We've got my AM checklist to go over. I quite often trade both the AM and the PM sessions, so we've got my PM checklist to go over. Got a live trade example to go over that I took last week, so we'll go over that and compare that to my checklist so you can sort of see it happening live. We'll have a look at when I don't trade, because that's a lot of wealth retention, is in not taking trades. And we've got some extra things that I consider at the end. One of which I've been able to catch some nice big trades off of on a Monday. So the AM session checklist. So first things first, I check the news for the session. Any sort of red folder stuff I want to be making sure I'm not in a live trade during. Anything else I'm happy to be in a trade with, but I just like to be aware of what's going on. Decide on higher time frame order flow and bias for the session. I'm not going to try and explain how to come to your bias. There's lots of other people that will explain it a lot better than me. And I think it's just something that you just get over time. It's not something that happens quickly. If it's something you're struggling with, definitely get onto other videos about bias. And yeah, it's just practice. You'll get there in the end. So yeah, decide on your bias for the session. Wait until after the 9:30 open. This is New York time, by the way. Look for price to enter a 15-minute or above PD array or sweep liquidity. So the PD array is a fair value gap, an order block, mitigation block. Again, if you're not familiar on them, go and watch some ICT stuff. Just YouTube search PD array and there'll be lots that'll come up. And then I'm looking for an SMT divergence on the 15-minute chart that matches my bias. I'm looking for a divergence between the 3 AM and whatever the current time is. So London open to whatever the time is now. And this is a key piece of my puzzle, is the SMT divergence. It means a lot of time if I've got the wrong bias, it doesn't give me a setup. It means I might have the bias, but it's not going to be a big day. It's going to be quite choppy, quite seek and destroy. It doesn't give me a setup. The SMT helps me avoid a lot of the crap, basically. And I don't take a trade without it now, and it's completely changed my trading. If you're unsure of what a SMT divergence is, I'm not going to try and explain it too much in this video. I'll briefly explain it, but I'm going to leave links below to someone who explains it a lot better than me. But essentially what I'm looking for, the NASDAQ and the S&P 500 normally move in correlation with each other. So if the NASDAQ makes a higher high, chances are the S&P's made a higher high. But I look to take opportunities where there's a cracking correlation. If I'm bearish in this scenario on the screen, I'm sat there waiting for my entry. NASDAQ has made a higher high. The ES has failed to make a higher high. So that's a cracking correlation, and I see that as the ES is being held down because there's a lot of sellers. You should really be taking your short on the ES. I personally always just trade the NASDAQ. I've found it doesn't make too much difference. Sometimes it might slightly, but not enough for it to concern me. So yeah, I look for this on a 15-minute chart. So we've had our SMT, and then I wait for a displacement after the SMT. So I'm looking for a strong reaction on a 1-minute time frame. So if I'm bearish, I'm looking for a strong candle pushing to the downside. I'm looking for a 1-minute fair value gap or a swing low to be violated. I then enter using market order after the close of the 1-minute violation candle. I enter via market order just because a lot of the time with this type of trade, it doesn't hang about, it moves quite quick. And I've missed quite a few opportunities in the past trying to wait for a better entry. So now I just market order in as soon as I get that close of the 1-minute candle. If the stop loss is too large, that's the only problem, you get large stop losses with that. If the stop loss is too large, then I'll try and enter at the earliest opportunity on any sort of retracement. And I mean the earliest opportunity you can. Don't try and get the best possible entry because you're probably not going to get it. And then I'm looking to target external liquidity or a PD array after the 50% of the range. You will quite often have a fairly large stop loss with this strategy. Having a large stop loss isn't the biggest of issues. Again, the trades that I'm sort of catching are large moves. You're sort of talking 60 to 100 point moves from my entry. So a 20 to 30 point stop loss is fine for me because I'm aiming for a minimum of 2 to 1, but I'm often hitting 3 to 1, sometimes more. My average is 2.5 to 1. So yeah, I'm not concerned about a larger stop loss. If it's too large, then go down to the micros. That's what I trade. So next we've got the PM session. The majority of the things are the same for the PM session. There's just a few small differences which I've highlighted in blue. So obviously the time is a big difference. So I'll wait until after 1 PM New York time. And that's because the lunch hour is between 12 and 1 PM. So I don't obviously want to take a trade during then. So obviously I've got my bias for the session. I look for a sweep of the lunch hour high or low, or price to enter a 15-minute PD array. That PD array can be within the hour, the lunch hour. And obviously if I'm bearish for the session, then I'm looking for a sweep of the lunch hour high. If I'm bullish for the session, then I'm looking for a sweep of the lunch hour low. After that, I'm looking for an SMT divergence on the 15-minute chart that matches the bias. So if I'm bearish, I'm comparing the highs and see if there's a cracking correlation. I'm looking for that SMT between 12 PM and whatever the current time is. If it's getting to 3 PM and I haven't sort of found a setup that I like, I'm probably going to be calling it a day. So this is just a quick example of a trade I took on Monday the 15th. This is on my YouTube channel if you want to go and check that out afterwards. But I just wanted to show you my trade and talk you through my checklist at the same time. So this is an hour chart at the minute. You're looking at me getting my bias for the day. Down the bottom here in this grey box is the new week opening gaps are on a Monday. So this is my target for the day. We are over 50% of the range. We are within an old new week opening gap, which price tends to respond off of anyway. We've just tapped into an hour bearish fair value gap. So going into this morning, my bias is bearish. I'm looking for shorts. So it chops around quite a bit. We did have an initial push down straight away, but we didn't have an SMT. That's what I was waiting for. We're now just having an SMT now. So if I pause it quickly, you can see I've drawn a little white line here. This is a minute chart, but if you look at it on the right hand side, I'm not sure how clear it would be. On the Nasdaq, we made a new higher high here. On the ES, we had failed to make that new higher high. So that was my SMT divergence. So now I'm setting up a short position, just sort of trying to see what my stop loss would be if we violate this swing low or this fair value gap. So I'm just sort of preparing straight away and getting ready for it to have that displacement. So yeah, we've had that displacement and I've gone straight in with a short entry. Wasn't the best of entries. Then yeah, we pushed straight down. I just marked out London low as I was going, just to sort of see how it responded there. I was prepared just to take the 2 to 1, but was sort of waiting to see how aggressively it pushed down, and it pushed down aggressively enough for me to target the new week opening gap. Well, I wasn't quite targeting that because I didn't need too much more to pass my Topstep combine, so I was only targeting my profit target essentially. But that's how I was able to call the top of this pullback. I knew exactly when it was gonna have its second push down. And I mean, in the grand scheme of things, it was actually quite a good entry. At the time, it didn't feel like the best of entries. I could have got in maybe a few points higher, but it's still a good entry. I did actually end up closing it slightly early. I was trading my stop loss quite tight. I was a bit nervous because I was close to my profit target to pass my combine. But in normal scenarios, I'd have just let that play out. I'd have let it play out and hit that new week opening gap. And I'm pretty sure on this day we ended up flying straight through that new week opening gap and carried on down in the PM session as well. But that's just a quick example of how I'm doing that in a live scenario. If you watch any of my other videos, you'll pick up on that. I don't explain it too much during the trading because I'm trying to trade it. But yeah, I'll point out the SMT. You'll see that I'm looking for displacement, and when I get it, I'm in quite aggressive. Just something to bear in mind as well. This strategy is boring. I'm only taking 1 to 2 trades a week maximum, and that's because that's when I'm seeing the setup and all my entry requirements hit. That may increase in the future to possibly 3 trades a week once my confidence grows with it. But if you're considering doing this yourself, don't expect to be trading every day. I think it's still very good when you scale it up. For me, copy trading 3 50k combines, I was able to make 9k in 2 months using the micros. But yeah, just don't be expecting to trade every day. So when don't I take a trade? This is quite important. Obviously you want to try and retain your wealth. You don't want to be trading in crap situations. So I don't trade Wednesdays unless there is high impact news. I don't think I've really ever heard anyone say that they don't trade Wednesdays. I've always found they tend to be quite a consolidation day. I'm sure I've heard ICT say they're a consolidation day. The trades that I'm looking for, I said earlier, I'm looking for 60 to 100 points. If it's consolidating, it's not moving that much, I'm not interested in trading it. If there is not 3 or more 1 minute fair value gaps within the first 15 minutes of the 9:30 open. I saw this on Twitter a while ago. I can't remember who I heard it from, but I've sort of been making, every time I see that there's less than 3, I've been sort of making a note of it in my journal. And yeah, after sort of 5-6 days of that, I've realised that if there's less than 3, it's normally a choppy day or a seek and destroy day. Again, probably not worth trading. And I just turn my computer off, and yeah, it helps me instantly miss out the choppy days. The afternoon session and the day of CPI I avoid. The day of FOMC, the day of non-farm payroll. I'll avoid the session of a Fed Powell speech. I'll avoid the PM session if I've had a win in the AM session. So if I've had a winning trade in the morning, I won't bother trading the PM. What's the point in risking that? And I won't trade Fridays if I've already had a good week. If I've had 2 winning trades earlier in the week, I'm not going to bother trading the Friday. Any time that I'm unsure of bias, if I'm not as confident as I like to be, then I won't bother trading. Any time I'm not in the right mindset. Sometimes you're just not in a good headspace, and it's better just to not turn your computer on. So extra things I consider: ICT Session Framework. I'll leave links to these videos below because he'll explain it a lot better. But essentially, there's about 6 different frameworks of a trading day. So for example, you might have a 2 session up. You'll have a morning rally, consolidate during lunch, and then sweep of lunchtime lows, and then a second rally in the PM session. Or you might have an AM rally and a PM decline. But basically, I've got these frameworks written down in my journal, and it's just something I consider, especially if I'm trading in PM. Okay, what's the AM session done? Right, we've had a rally this morning, we're consolidating during lunch. Looking at a higher time frame point of view, there's no reason for it to reverse here. So chances are we're probably going to have a sweep of the lunchtime lows and then a rally to the upside for the afternoon. So then that's how I base my bias for that session. And the other thing which has been a bit of a game changer for me is the new week opening gap. This isn't a new concept or anything, but I've only recently stumbled across it, and I've been able to catch some really nice trades on a Monday using the new week opening gap. But it's essentially the gap that's sometimes created from the New York close on a Friday and then the Asia open on a Monday. Sometimes there's a fairly large gap between the price, and price tends to draw back to that gap later in the day. And yeah, I've got some nice trades targeting that gap. I think I'll do another video on that separately at some point, but I'll also leave a link below to someone who'll explain it a lot better. But yeah, that's the strategy I've been using for the last 2 months that finally actually got me funded after 11 months of trying different things and failing miserably. This is the thing that clicked for me. Might not work for you, but I found it worked for me. If you're looking to start your trading evaluation to become a funded trader, I've left a link for Topstep in the pinned comments. If you found this video helpful, hit that like button. I'll see you next time. Happy trading.